Now, as we continue our focus on Kenya's pitch as an investment destination, let's turn our attention to how taxes that you pay here are actually being spent. Take 2011-2012 as a fiscal year, for example. Back then, government agency couldn't explain to the public auditor how they spent nearly $3 billion. And that trend of questionable public spending still occurs to date. When I spoke earlier with Kenya's Industrialization Cabinet Secretary, I asked him if Kenya's questionable public spending habits were the weak link in his pitch to investors.
Of course, the Auditor General is bound to raise issues, but those issues are resolved, in a manner that can be explained. Auditors raise issues, but they need to be resolved. So what you tend to read in the local newspapers is mostly questions being asked about certain things, but you don't get to hear about how they have been resolved.
How about the way we're evolving in terms of regulation, the engagement between the private sector and the government? To give you an example, extractives. There's been a fairly fierce dispute between Base Resources and the mining CS over value-added tax refunds on one hand and royalty rates on the other. Now, in this particular instance, it was a case of Treasury saying, okay, we'll cut a deal with this company to give you this income tax rate and this amount of royalties. I mean, moving forward, are we streamlining procedures to avoid such incidents in future?
Our intention is to basically make Kenya as the preferred investment destination by investors from all over the world. And investors that are already here can be good ambassadors for that. And where things don't work, we expect them to give the necessary feedback.
Your private sector experience must come in handy during those sort of meetings, doesn't it?
I mean, one of the reasons why I have the benefit of looking after this Ministry of Industrialization is the amount of interaction that I do have with the private sector. I have a good feel for what private sector expectations of government are, and based on my own experience, one of the most frustrating issues that I have seen in my private sector life has been access to senior government officials, because everybody is busy.
Let's talk about special economic zones, especially with regard to industrialization moving forward, because the percentage of GDP has remained static at about 10% or so for the last decade. How do SEZs come into increasing that proportion of GDP that comes from manufacturing, and how are we going to go about it?
To improve our manufacturing capability, the number one issue we need to deal with are the key things that they require to thrive. Electricity, both in terms of cost and the supply. And we continue to increase our electricity supply, largely through renewable energy like geothermal, wind, and solar, as a way of making sure that when manufacturers come, they want more energy supply, we have it available. Standard gauge railway is geared towards supporting that. So we've just not made the right investments in the last few years, and that is what we are doing right now. So these are all things that are geared towards making it easy for businesses to operate here. And that way, I think we will have every reason to basically look investors in the eye and say, if you've got the right caliber of labor, both in terms of supply, cost, and productivity, if you've got a very strong, dynamic financial sector system where there are no restrictions of foreign currency, where there's no restriction on ownership of the business, you could own 100% as a foreigner, where repatriation is not restricted in any way, what has been left is some of the heavy stuff of infrastructure. And that is where this government is focusing a lot of its efforts, its resources, that is making us look like we are borrowing too much, but I think we are borrowing not for consumption. We're borrowing money to actually develop an infrastructure that would yield results for the future.